Good evening, everybody. Welcome to the Lock in Your Success Trade and Market Update for July 22nd, 2012. All right, let's take a quick look at the markets and see what they're telling us. If you remember last week, let's see, the 13th was the last trading day before last week started. Had a up day right on the 13th, and I was saying I was short-term bullish, longer-term bearish, which kind of translates to bullish earlier in the week and a little bearish later in the week. And that's what happened. We had this continued up move, and we kind of pulled back here on Friday. So the question becomes, where do the markets go now? Long term, we are still in an uptrend. On our daily charts, we are still in an uptrend, and again, this is the SPX. What I would expect out of the SPX would be to drop down into this area and then continue to bounce. So, short term, if I'm looking just at the SPX, I am expecting a drop a little bit lower and then probably a bounce up. If I take a look at the Russell, I am getting exactly the opposite signal. Right here we have our nice daily trend line. Of course, our longer term trend, if we were to do that, would be here. Here, let's just temporarily put a line in here. Our longer term trend line is here. It is a little bit lower, but on our daily trend, we've come right back nicely into a support level. And if I was looking at this chart by itself, I would be expecting a bounce early in the week higher and possibly a breakout a little bit higher. But given that the SPX is showing us the opposite signal, let's take a look at some of the other indices and see what they're saying. Let's shoot over to the Dow. The Dow has more of a pattern closer to the SPX, right? We had this up move, and now we're just starting to retrace, and it looks like it probably wants to retrace down into this area. So I would say the Dow is telling us the same thing the SPX is, which is we come down further before we bounce. And if we take a look at the NASDAQ, same type of deal here. Our primary trend's way down here near the red. Even if you're looking at horizontal support levels, you're looking at way down here. So this is telling us the same thing. It's coming down a little bit before it bounces. That gives us more, basically three indices against one, to the bearish side, short term, and longer term bullish. So what does that mean for the Russell? One or two things are going to happen here. If the other indices come down, the Russell's going to come with it. At least hit these prior lows down in here, down around 775. And if it times incorrectly with the SPX coming into this level here, then I would be expecting a bounce from that point. If, however, the SPX decides to turn around and break out to new highs, that's going to mean a very, very aggressive bounce for the Russell probably. It being at its support level, if the SPX breaks out higher, we're going to get an aggressive bounce up. So we're kind of at a indecision point in the markets, but it is leaning slightly to the bears at this point, indicating we're probably going to break this line and these trend lines here and probably drop out on the Russell. Unless, of course, like I said, this has the power to pull the other three indices up. Doesn't usually happen, but it's possible. So that's my call on the markets. Let's take a look at our positions and talk about market conditions a little bit for a minute. Let's talk about our August bearish butterfly first. And one of my students pointed this out to me, and I also was blogging on the SMB virtual trading floor about this also, is that you probably noticed that a lot of value came into this position on Friday. The markets were down, implied volatility was not raised significantly, and there was a drastic price increase in the butterflies. And being near expiration and being up near profit target with this pullback, if you were one of those traders that are planning to exit a bearish butterfly 21 days to expiration at a reduced profit target, and we get this nice pullback right into the center of the graph, and you get a day when the butterfly prices increase significantly, or I should say more accurately, the value in your position increases significantly. That is an excellent day to exit. I mean, even if we stay in here tomorrow and the price continues to go down, and hey, you may have been better off staying in it. Even so, I really like exiting near the peak of my T plus 0 line. If it's later in the trade, if it's closer to my 21-day expiration profit target, which you should be if you played this by the guidelines, should be very close to your profit target. And then Friday was certainly a very nice day to pull this. I did pull some of my larger positions on Friday, and I was very happy with the profit, very, very close to profit target. And you can see here, if we open Monday lower like the futures say we're going to, we'll probably be able to pull this at profit target at some point on Monday if I'm around to do it. I'm going to be out most of the day, I think. But either way, this trade is looking really, really nice. And Friday was a good day to pull it. Maybe tomorrow or Monday will prove to be even a better day. But you take what you can. You take what you can. It was definitely favorable conditions, and I wouldn't blame you one bit for pulling it that day. Certainly, if your plan is to get out 21 days to expiration at your reduced profit target, and the market is down into the 785 area tomorrow, this trade should be gone. Pocket the money, nice full profit target month, or darn close to it, and move on. This being a complete guidelines trade, I am going to wait till I can actually pull out of this at profit target, or if it's 21 days, it goes. If we're up over $500. But like I said, great month for the August bearish butterfly, and this is how and when the trade reacts very well. When we have, if you remember right, earlier in this trade, we got in somewhere down around here, and we had this very, very aggressive up move. I know some people were panicking a little bit on the August bearish butterfly because it was down 2/3 maximum loss. But this is exactly how that trade is supposed to work. Where we get in, we get a nice early bounce in the market pulls back into our range, and that is the bearish butterfly. That is, like I said, very, very good conditions for that. And you just have to get used to that if you're going to trade this trade. That's nothing unusual. Okay, so let's just take a look at the August M3. Okay, here is the August M3 position. If you remember right, we got in this very, very late. I think it was actually, not only did we get in it in a not the greatest day, but I got in it at the very worst time of not the greatest day, which was the very bottom of this candle right here, this little bottoming hammer, and way in down here, and because the price was at like 778 at the time, I don't think I could have hit it any lower. I got it in at the 750s. Then with the market reversal, the price more or less got ripped out of those butterflies. I mean, I bought them for $12.50, and it instantly, probably not instantly, but probably 2 hours later that day, they're down to like $10. And that's just from the sentiment change, from a bearish sentiment to bullish sentiment, and the market started cruising to the upside. It pulled those out, making this probably my worst entry in, I'd probably say 6 months. Very rarely does this happen to me, but occasionally it happens to everybody. Again, I should have known it. I was coming right into a trend line. Should have thought about that a little bit and said, hey, why don't I see if this trend line resolves itself before I get in? Had we gotten in a little bit higher, then this trade would have been really, really piece of cake. Probably never down money at all. And like I said, the only reason it's down money is because of a very poor entry. We did come back. We were down about $600 or so. So we pulled down to about minus 187 on a 5 lot, which again is no big deal. but it certainly would be nice if we are up money, a little bit of money instead of down money. We will work this thing and still see if we can get near our profit target a little bit later in the month. But the trade looks really good, and it's recovering quite nicely from the entry that we had. And I'm looking forward to see where the market goes this week. If it does indeed pull back to the 775 area, that'll be really nice for us. And as it bounces, we will start putting more vertical power in here to keep our zero line flat. And then as we exceed the 810 area here, we'll start rolling this up if it actually goes that way. And to the downside, we start pulling much under 750. We'll be rolling this back. So that's pretty much the plan for this guy. You'll see, being 25 days from expiration, money's going to start coming into this position fairly quickly. If the charts decide, if Russell decides to break down into this range and hold the range in here, I should be able to deal with it. What I was really hoping for earlier in the month was for a pop up to 815. That would have allowed me to very efficiently and very easily roll these to 770, and this would be looking even much better now. Maybe I should have done it anyway. I was kind of, like I said, I was kind of waiting for that pop to 815 to do it, which never happened. If you look at our charts, I thought we were going to come up in here before we backed off. Which, if I was watching the timing on the SPX, I may have realized that we were actually going to back off prior to that. You know, as soon as we exceeded these highs, I should have expected that to back off. But like I said, I've been busy, haven't been able to watch the charts in the market. And this trade is the great thing about this M3 trade is you really don't have to. You know, you get in these situations sometimes if you're not paying attention, or if you just decide that you're going to trade in a manner where you pay absolutely no attention to market movement whatsoever. You'll get in these situations a little more often. But if you do watch the market, it's very seldom this happens. But again, no big deal. The trade looks nice. I'm looking forward to closing this out at a profit later in the month. And I think that's about it. That's all we have open. We will be looking at putting on our September Bearish Butterfly, 56 days to expiration, which is going to be right around Friday. And make sure you're responsible if you are going, unless you're an experienced Bearish Butterfly trader and you're going for a very high profit this month, which is possible. This is one of these months where, if the market behaves, we can actually pull a lot of money out of the market. But you really shouldn't be doing that unless you're experienced. You're at profit target, you're 21 days to expiration, or getting darn close to it. You know, pull the trade if you're a newer trader. If you're a somewhat experienced Bearish Butterfly trader and you're used to trading a little closer to expiration, I'd recommend you bring your size down. So if you're trading 10 contracts, maybe come down to 1 or 2 contracts, and trade those into expiration. Get some practice doing it. Pretty good month for that. Like I said, if you're new, you should be out. If you're very experienced and you like pushing these, which I'm going to have a larger size position that I'm going to push on the Bearish Butterfly to see if I can make 100% out of it this month. But it's very possible if the market behaves. If the market takes off, that position's closed out and I'm going home. It is a definite, a good setup to go for it this month. If you're experienced only, please. And I will keep you updated with the positions. Have a great week, everybody, and good night.